Hello, good evening. Am I audible? Is my screen visible? Is the voice is loud and clear? Can some people confirm me? I audible and visible. Okay. So what is the somebody said it's not. Uh, so am I audible? Is my screen visible? Is my screen visible? Right. Okay. Fine. Okay. Let me see how many have joined. Okay, good number of people have joined. We have crossed 50, 55. Okay, it's increasing. People are joining it. We'll wait for 1 or 2 minutes, then we'll start off the session. Okay. And okay, today we'll quickly wind up by 9 p.m. We will not extend it. Okay, we'll not extend it. We'll quickly stop by 9 p.m. Okay, fine. You're audible and screen is visible. Fine, fine, fine. All is well. Okay, all is well. Now we will start today's session. Today we would be covering up the fundamentals part completely. Okay, we'll be covering the fundamentals part to a certain extent. Will not be going in depth of fundamental. It will be only basic fundamental. How are we going to do? I mean, if you find a new stock into the market, can I take that stock or not? As the same what I example that day. Okay, fine. So let me quickly go to a spreadsheet. Okay, let me take the same spreadsheet what we are using it. Okay. Fine. I'm active on the chat box and the communicate in the webinar window itself. Okay. Questions. Let me pop this out so that I can see if anybody asking question later. Fine. Can we start, guys? Audio is good. Audio is good. Is my screen is also on sync? Can you all able to see my Excel sheet? I've just opened the Excel sheet. Can you all able to see my Excel sheet? Am I audible? Is my Excel sheet is visible, guys? Can you please confirm me? Hello. No. It means that Excel sheet is not visible. What's wrong? What's happening? Let me share my screen again. What's happening? I think nobody is able to see my screen. It shows waiting for the next screen. Uh, the network is also fine. Okay, give me a minute. Uh, guys, just give me a minute. Excel screen is visible. Anand is telling. Is my screen visible? Okay, blank Excel sheet is visible. Is visible, right? Can we start? Just give me a minute. Let me see if there's any problem from my side. Okay, is my screen is visible? That's all. Move your cursor. Can you? Is my desktop is visible now? Now it's fine. No Excel is open. Is my desktop is visible? I really don't know, guys. Give me a minute. Okay, all fine. Okay, I think it's fine now, right? Okay, there was a complete network down all the way. My even my mobile network was down. My dongle is also down. My other Wi-Fi is also down. All the networks were down. I don't know what's the problem. Every network is down. I think everything is fine now, right? Okay, fine. We'll start. I could see that you can able to see my screen. There's a huge video lag is happening. What's problem, guys? I really don't know. Sorry for this. I don't know. It never happened. Even my other network is also not switching on. And mobile is also not coming in. Wi-Fi is on. No, I have not seen the desktop. Okay, I think yeah, mobile hotspot also. I'm trying it. Even mobile data is completely down. I'm not sure. Even the hotspot is not getting switched on. I really don't know what is the issue. Okay, now I think now it is fine. There's a transmission issue from my side. Okay, it's a transmission issue. Uh, Okay, fine. Okay, okay, fine. I think I could able to see. Let's start. Okay, now what are we going to cover today? Today we're going to cover the fundamentals. Okay, today we're going to cover the fundamental part. After this call, I'll have a call with this network team. I'll see what is it. If there any issues happening on the back end side. Fine. Oh, let me move and check. I think it's fine. People are confirming back, uh, and my speed is also not bad. Okay, I'll check the speed later. It's fine now. Thanks, thanks, thanks. Okay, what is fundamentals? The things which we're gonna cover today is, it's not the complete fundamentals. We are not going to a deep dive in of what's happening in the fundamental, what is the use of fundamental stocks. uh, I've increased the font. Okay, what is the use of fundamental stock? How do we identify stocks? No, that is all freely available in the market. So what are we going to cover in today's fundamental class? Okay, today fundamental class we're going to cover a basic important steps ratios which is required for you to take a decision whether can I invest in those stocks or not. Those kind of things will be covered in today's fundamental class. Okay, I hope I'm clear. Now this is a couple of fundamentals ratio which we're going to discuss, which we're going to look at it. There's something called as EPS boost street. Just give me a minute. We got some news. Okay, you all know, right? Government has approved to do a 100% FDI investment on the banks. So this will lift the market tomorrow again. Market tomorrow again will gonna go fly non-stop. Let's come back to the topic. Now, first thing is earnings per share. What is earning per share? That means that what is the money which we gonna get for the shares what we have invested. Total number of profit divided by total number of outstanding shares. If the company is a company made a profit of 10,000 rupees this quarter, if they have 100 shares, if they have 100 shares issued in the market, everybody will get a profit of 100 rupees per share. So what is the money every shareholder expected to get? That is called as earning per share. Okay, what is the inference which I am supposed to take from this particular ratio? That means that a logic is simple. Earnings per share have to be increased when compared to last year. Okay, that is the only one thing which you are supposed to look into it. Clear? Earnings per last year should be, this year should be greater than last year earnings per share. Fine. What is PE ratio? PE ratio is price to earning ratio. That is price of the stock divided by earnings per share. The price of the stock divided by earnings per share will give you the price to earning ratio. So what is the good PE which we are supposed to take care? See, there is no material which can tell you what is the good amount of PE. It depends upon what kind of industry they are into, what kind of sector they are into, what kind of business they are making into. And the PE always will be compared to the peer comparison. Okay, what is PE ratio? Every 1 rupee of earning in the market, what is paying? High PE indicates that the investor expecting a higher earning in the future. However, the lower PE but higher visibility, it's good for better investment. So if the PE is extremely high, do not go for that kind of investment. To be a good value, it is good to between 13 and 20. Less than 30 is undervalued stock, okay, which is expected to be a negative growth in future. Again, it's not an exactly figure. Do not keep this figure in mind. Always look into your peer comparison. That we will do it when we go for a fundamentally stocks. Book value. What is book value? Book value is total number of outstanding shares, total book value divided by total number of outstanding shares. That means that just to make you understand, I've got 1 lakh rupees in my company, okay, and 100 shares. I'm 100 shares having in my company and having a money of 1 lakh, and I'm having a debt of 15,000, and having a bills payable of 5,000, and I have a depreciation of some 3,000 rupees. Okay, so what? And I'm still having a bank loan of 25,000 rupees. Okay, total money, the liabilities which I'm supposed to be paid to the customers or the vendors. So I'm going to remove this and this. If at all the company is closed today, what is the each shareholder will get the money? That means that every shareholder will get the money of 520 rupees. The share price may be trading at 600 rupees or 650 or 700. Okay, or share price may be trading at 500 or 450 or 400. These are market prices in the market. But if at all, if I close the company today, each shareholder will get only 520 rupees per share. Okay, so the value as per the books of the share is called as book value. Clear? Let me put back questions if I get any questions. Any questions, guys? I want to make sure that it is transmitting. Hello? Hello? Guys, I think I'm talking. Guys, I got scared. Sorry, guys. I got scared. Nothing is working. I'm talking to myself. It's working, right? No doubts. Thanks. Because I'm not able to get your questions on my communicator chat. Okay. So I'm looking back to the mobile. So till this, I get a complete this view in Telegram. The only last message I got is 10 minutes back from Naseem. Okay, fine. We sent a message in chat. I'm not getting any communication in chat. I think there's some problem again with webinar people. You could able to hear me, you could able to see me, but this is not coming. But I'll be using mobile today till the issue will get resolved over here. Okay. Okay, fine. Now we'll go to the further next one. What is the same thing? Price to book ratio. Don't worry about it. The next important thing is debt to equity ratio. That is total liabilities of the company divided by total equity of the company. This is the ratio. This is one of the important ratio which we're supposed to work on it. That means that what is the amount of money what they've taken by the company. Debt equity ratio. Any debt equity ratio above 1 is not good. Okay, that means that they've taken huge amount of money from market. Any ratio less than 1 is welcome. Okay, any ratio less than 1 is welcome. Any ratio above 1 is not good. Again, this depends upon industry. Okay, depend upon industry. What is total liability, total equity? If ratio is 1, it means that the liability is equals to the equity. What I'm having money, I can pay my entire debt what I've taken. Excess debts leads to a higher rate of interest, and EPS will come down. That we look into the further. ROE, what is the returns the company has given on the investment, return on equity. This is sufficient for you to take care of all the fundamentals analysis. With just this little knowledge, you would be able to judge the fundamentally strong stocks. I'll let you know how. Okay, now for this thing, I'm going to a website, stockagescreener.com. Okay, what you're supposed to do, you're supposed to create your login from your email ID. Okay, login from your email ID, and you can add couple of other things which I'm showing it to you now. Okay, which company can we start looking into it? Any one company, whichever company first comes, I'll take that company. Book value, nothing but what is the money left available in the market divided by, not market, in the company, divided by number of shares. That means that will be look into it here now. S Bank. I got S Bank. Look into the S Bank. Okay, now I'm going to go each and everything in detail. Market cap, what is the market capitalization of the company? Current market price is 334 and the book value of the share is 104 rupees. If today, if we close the S Bank, if S Bank is getting completely closed today, every shareholder will get only 104 rupees per share. They will not be getting 300 rupees. Okay, that means that the 300 rupees will not be received by shareholder. If you're having a one share of S Bank by paying 334 rupees, if the company closes today, you'll be getting only 104 rupees. That is called as book value. What is supposed to be paid to you. Next is stock PE. We have looked into what is stock PE. Look into comparison of the PE. The S Bank PE is decently placed at 20.91. A good bank to invest and compared to a PE ratio of all the banks. Kotak Mahindra Bank and is also very good PE. That means that people are expecting a good ratio of returns on this company. It's not too low. It is decently placed on the PE side. Okay, that is PE. Dividend yield. What is the dividend percentage the company is giving for the shareholders on a quarter on a year on year? Will come and look at here. Higher the dividend percentage, that means that the company is able to make a profit and this company is able to deliver the profits in terms of dividends back to the shareholders. Am I clear? There's a huge network on mobiles also, I think, today, guys. I could feel that in my mobile. My network is getting connected. Only my Wi-Fi is working. Okay, what is the face value of the share? That means that when the company is issuing the shares, usually the company receives publish the shares with the face value of 10 rupees. The PE, stock P is 20.44. It is written over here. I don't know why it is showing different figure. Okay, doesn't much difference. 0.5, 0.50% doesn't much difference. Okay. Okay, what I was telling about the face value. If the company usually allows the IPO with the face value of 10 rupees, when the stock has gone extreme high, they'll give a bonus of 1:1 share. But the company face value will become 5 rupees. Again, after a certain extent, the company again split the shares into 3:1. That may again the company share face value become 2 rupees. Like that goes on further down and down and down. So in comparison with that, if you look at the face value of Eicher Motors, it is still 10 rupees. So company has never splitted the share, their company share. If they split the share, the company share price will become 12,000 rupees and the face value will become 5 rupees. Or if they issue 1:10 shares, the company share will become 2,700 rupees, face value will become 1 rupee. So if you look at TCS it already done a multiple split up. The face value is just 1 rupee of the share. Okay, well, we'll continue. Next is TCS is paying a good dividend percentage of 1.67% when compared to S Bank. Okay, a face value I've explained. Next is NSE, BSE, that's fine. Company website, we don't need it. High low, everybody aware of it. Return on equity from the average return on equity from the last 10 years is, it can't go below 1. Yeah, it can also go below 1. After 5 years, after a couple of years, share price become 10,000 rupees. TCS might split the share again 1:2. Then face value can become 50 paisa. I never seen it as going down, but I've seen it was 1 rupee. Then maybe they'll issue number of shares more to bring down the share value current market price. They can go additional shares. They can issue additional shares to bring the share price down. They'll not go more than 1 below. I've never seen so far. I don't know technically allowable or not. I'm not sure, but I never seen it. Okay. Then average return on equity from last 10 years 38%. This year is 32%. So last 10 years company is doing performance very well, and this year also company is doing performance very well. Debt to equity ratio, it is 0. As I said, anything less than 0 is always anything less than 1 is always a welcome. What is debt to equity ratio? 0 means the company has not borrowed any money from public to run their operations. If you go bottom, if you look into the annual balance sheet, the balance sheet borrowings will be very, very, very less. When compared to this liabilities of 1 lakh crore, 200 it will not even come 0.1, 0.2%. That is why they're showing it as 0%. However, in the case of if you go to the you're working on S Bank, S Bank will have a high debt equity ratio. See, 8.23%. Now you can ask me a question. It is very high. Why should I invest in this company? In such case, you should smartly think that what industry they are into. They are into banking industry. So what does bank does? Bank, what is the revenue for the bank? Revenue for the bank is the lending. When I lend the money, I get the interest. Interest is my lend, is a profit. But if I want to lend the money, how will I lend the money without having money in my hand? So what does bank will do? What the bank will do, guys? Can somebody explain me? Yes, the bank will borrow. From whom they'll borrow? Bank will public. Yes, the exact answer is Reserve Bank. Okay, bank will borrow money from Reserve Bank. Of course, they borrow from public also, but that money is not sufficient. They borrow $1 billion together money from a RBI. So if you go to their particular balance sheet, if you look at here, the borrowings would be very, very, very huge. Look at the borrowings. 1 crore 81 lakhs 480 crores money they have borrowed. Why they borrowed? Because they have to lend money. They borrowed very cheaper rate from RBI, like 3%, 4%, and they lend it to a customers with a 8%, right? So they lend it. That is the reason. That is the reason when the RBI buy policy review happens, it affects the banking industry too much, because if the government RBI regulates the price to lesser price, lesser interest, it is benefit for the bank. They can make more money. That's the reason buy monetary policy in the bank, which is done by RBI, is very, very important for all the banking sector. Okay. Now you should be able to correlate why it is so much of important, because they have taken 1,81 crore, 1.82 crores of loan. A 0.25%, 0.5% will make a huge difference in them. Okay, repo rate, yes, repo rate we call it as. And why the repo rate in US will make a difference? Because RBI has taken so much of money from US market, and if they increase the interest, that affects RBI. When it affects RBI, they'll push the load back to bank. When they push the load back to bank, the load will come to general public. Okay, so industry PE ratio, simple. Go to Google and search for what is the good banking industry PE ratio. Now I told you what is P ratio. Okay, now just go to what is the good industry P ratio for banks. So you'll be having lot of articles onto it. Go to investorpedia.com. As we always say, just have a look at it. You'll have all the industry average good PE ratio, because we cannot fix it 1-to-1. It has to be depends upon the industry and industry. So see, approximately it's average is 17.8. Okay, you'll be getting it over here. Simple. So every P ratio will be available average year. So just Google it. Okay, let us not worry about what is a good P ratio, but what you see is you just see a comparison of here. Okay, before going further, let us complete this part. Then next is promoter holding. What is promoter holding? Promoter holding is when the company has been formed, how much percentage of the how much percentage of holdings held by the promoters. Can somebody tell me any company which has a good promoter holding? Any company which is having a good promoter holdings? MMTC. I think my network is killing too much. I expected the answer from Wipro perfectly. That's one of the company where the industry P ratio is extreme. I mean, not P ratio. It's not opening, guys. I have a good speed here. The speed is good. 7 Mbps speed is very good. So it should transmit. Wipro. Okay. Now, yeah, video refresh it is very low, but speed is good. Transmitting the amount of transmission going out is very good. 7 Mbps is a very good speed. So look at the promoter holding. Promoter holding is 73% in Wipro. What does it mean? That means that the promoters holding a huge stake in the company. They're holding a huge stake in the company. Promoter believe that the company future for company the future is good. It means your software is not supporting. Which guys, which software? This is webinar is a web version. There's no software. The output speed is very good. I'm getting a good download speed is very good. Hmm. It's not software. It's a web version. So it should not. I don't know. Maybe the again technical issue we are seeing from last 2-3 days, right? Is lying for everybody or only couple of people? Is problem for everybody? Could be because the speed what is going is very good speed. Okay, no problem, fine. Right? If any one person is able to receive the output clearly, that means that the output is going properly. If anybody, one person is able to receive, that means that the output is good. As simple as that. Okay, let us go further. So promoter holding as much as possible, it is good for the company. Next is, we talked about these two. Then EPS last year is 18%, EPS this year is 19%. Okay, that means that the earnings per share from last year has become increased this year. So for me, my last year every share has given 18 rupees, but this year every share is giving 19 rupees. Earnings per share is 19 rupees. That means that every share is fetching a good amount of money. Face value is 2 rupees. It is fetching a returns of 19 rupees earnings per share. That means that the ratio is good. The company is making a growth when compared to last year, this year, when compared to last year. Okay. Next, price to book value. So book value is 2 rupees. It is trading at 2.63% from the book value. This is I just added last month. There's no much inference to derive out of it. Something called as PEG ratio. I have not explored this PEG ratio, but what you just keep in mind that good PEG ratio. Sorry, PEG ratio. What is a good PEG ratio for the stock? Theoretically, perfect correlation between market value and the earnings is called as PEG ratio, as in with PEG ratio to a stock. PEG ratio higher than 1 is generally considered unfavorable, suggesting a stock is overvalued. Ratio lower than 1 is as a better. Okay. Any PEG ratio is, if it is less than 1, it is good. If it is above 1, it's called as little bit overvalued stock. Okay. Is low PEG ratio is good? Yes. So it is available. But what you need to keep in mind is any ratio less than 1 is a favorable. Okay. Should be less than 1. That's all we want. We don't want to want what is PEG ratio, how it is considered, what is the formula, what is the theory behind it. We don't need to know all those things. You can see what is the PEG ratio formula. It comes over here. Okay. So let us not spend too much of this to understand the formula and all. It's available. Market value per share divided by earnings per share divided by projected annual earning growth. Okay. Projected annual earning growth is called as PEG ratio. It's available. Let us not remember all those things. For me, what is this? It will be less than 1 for me to do an investment. Okay. Now, any doubts in this part, guys? Any doubts in this part? You should be able to read this part quickly if we go to a further stocks. Okay. We'll run through multiple stocks. Any doubts in understanding these concepts before we go further? Hello, people. No doubts. Thank you. Thanks a lot. Okay. Let us go further. Okay. If you still further comes down, you get two things: pros of the company, pros and cons of the company. Okay. So here you just have a look at it. What is good for the company? What is bad for the company? This is which bank? S Bank, Wipro. The company has delivered a poor growth from last 5 years onwards when compared to an average growth of 23%. Okay. Company is having a healthy dividend payout of 18.92% dividend payout. That is very good for the company. Now, this is just a comparison of peer comparison where it has been standing out of rank from 1 to 7. Just have a look at it. Nothing much to inference to derive out of it. Okay. Comes down. In this part, we get a company quarterly results from last 10 years. I mean, last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 quarters it is available. Now I'll go one by one. Okay. What is sales? What is sales? What is a company making a profit out of a sales is out of its business is called as sales. For a manufacturer, for a Wipro, it is sales of services. It's a service company. If you go for a bank, what is the interest the bank is earning with that is called as sales. If you go for a manufacturing company, what is the finished goods it is selling called as sales. If you go for a automobile industry, how many money generate using selling of cars and motors is called as sales. What is my inference? My inference is sales have to be a increasing figure quarter on quarter, quarter on quarter, quarter on quarter to be considered as a good amount of good company. Expenses, the direct expenses spent by the company in involving in the sales is called as expenses. Expenses also have to proportionally increase when compared to a in relation with the sales. If it is less going down, it is also a good. Okay. Next, what is operating profit? The money what they got in sales minus the money which is spent for the expense of the company. The remaining money is called as operating profit. What is OPM? Operating profit margin. Nothing but this money is converted into percentage. So they are able to save a 20% of the profit out of their business as a operating profit. Next is other income. What is other income? Any income generated out of the core business is called as other income. Okay. Any business, any money coming out of different from the core business is called as other income. What, for example, uh, what do I give example? What example I give? Okay, let us take the same example. What does Wipro does? Wipro doing a consulting and software industry. That is what they do. So suddenly they might involve in manufacturing some small unit of it. Small manufacturing unit, they got some profit out of it. Okay, they are buying doing a trading. So company has a small amount of money they kept for trading and investment. The money which coming out of that is called as other income. Okay, for a manufacturing industry. So if you do any business apart from the core business which you form for the company, if it is for example some company for example, what example, if Maruti is manufacturing car and selling, if they stop manufacturing car Maruti, if they get into some other business, make some money, that is called as other income. Okay, income from investment. Yes. So what is the outcome? What is in it for me? Other income always have to be less. It should not be a more. If the other income is increasing day by day by day, okay, increasing day by day, and when the money from a main sales is going day by day low, it is called as negative impact for the company, because you are not doing the purpose of formation of your company. You are deviating your business from your core business. It is a negative mark for the company. So other income always have to be less. Next is depreciation. Any money written off on the depreciation of assets, that is called as depreciation. Interest. What is this interest? If the company has borrowed any fund from financial institutions or a bank, the amount of money which they're paying as interest will be called as interest over expenses for the company. Next is profit before tax and tax. How much company has paid? Net profit. Now what is inference for me? My inference is only two things over here. Sales have to be increasing, OPM have to be constant or increasing, and net profit company is able to make a net profit. If you look at Wipro, the net profit remains same. Net profit remains same throughout last 10 quarter. So I do not see any growth in what the company Wipro. So in the same time, if I look at TCS, the net profit has gone from 3,000 crore to 6,000 crore. 100% increase in the net profit, the money what they're earning. If I look at Infy, they also gone from 3,000 crore to 5,000 crore. Okay. increasing. And if you look at Hindalco, it has gone from 350 to 390 crore. So basically it has to be on the increasing phase. Okay, it has to be on the increasing trend. Clear? Now, any doubts in understanding this particular table, let me know. We'll take up this before we can go further. OPM is operating profit margin. What is the percentage of money they're able to save out of sales and expenses? Okay. If they got 100 rupees, they spend 80 rupees, 20% is their profit, operating margin profit. Can we move ahead? Yes. If you go further down, you find the annual results. That the same, the quarterly results is converted into annual results, last 10-year results. You can see this company has gone from 13,000 crores to 1 lakh 20,000 crore. The company is able to make a good amount of sales as increasingly gone. The same inference will derive out of this, but on a quarterly basis. Okay, on a yearly basis. If the expenses are not in proportion with sales, a good sign. Yes, if the expenses are going down, it's always a good, because they're able to, their operating margin will go higher if expense goes less. Okay, the only thing which extra over here is the company is able to make a good dividend payout. Earnings per share was 58 rupees. It is now 124 rupees. Almost 2.5 times the company has increased earnings per share, which is a very good sign. Okay, very good sign. Sequence in peer comparison. It will automatically show up some sequence in peer comparison. You can just always look at it, how they are performing. That's it. Nothing to, you can look at how the peers are performing. And dividend payout, they're able to pay a good amount of dividend to the public. Okay, so it is what, and you can also look at here, return on equity, profit growth, everything has a good positive figures. Look at average 10 years, 5 years, 3 years, they're doing good. Compound growth is also good. Now the company is not doing so good. It is 10 years, 13% on equity. It's good. Okay. Now, any doubts in understanding the annual figure? See, OPM, there's nothing called as a good or a bad. So far what we have seen, all the IT industry is giving a operating margin of 27%, 27%, right? So let us see what is the good operating profit margin. OPM will add it. Okay. So almost everybody is giving between 25 to 30. Tech Mahindra is giving very less. That means that they are spending too much of money. Oracle Financial is having a highest operating profit margin. So if you look at Tech Mahindra, they may be spending too much of time on the expense, too much of money on the expenses. The expense is huge. That's why they're having very less operating profit margin. But if you look at these people, they are very good. Who? Oracle Financial, very good. They're able to save their good amount of profit. Then the net profit of this would be very high. Oracle Financial Services, their OPM is really good. Okay, their OPM is really good. So their profit also will be very good when compared to their sales. Okay, out of 1,200 crores, almost 300 crores. How much percentage? Almost like 25-30%. They were able to make amount of it. Okay. Next, we'll come back to it. Now, next is balance sheet, company share capital. The amount, you know what is company share capital? The amount of number of shares that are issued into number of amount, the price. So if we could see 197 into 1 rupee, 197 crores into 1. That is the number of outstanding shares available for TCS in the market after a split up. Okay, after a split up. What is reserve? The amount of reserve kept in the bank or the company's reserve capital is this much. For example, to give one more example, if the company's face value of 10 rupees, everybody say face value 10 rupees, they say we are selling a premium of 300 to 330 rupees each share. Okay, so where this extra money goes? This 10 rupee will be in share capital. This extra 290 rupees will be shown in reserves of the company. Okay, of the company, it will be shown over here. That is called as reserve. Any additional capital which is kept, funds of the company will be kept in reserves. Okay, next, borrowings. What is borrowings? The borrowings is the one which the company have bought from public. So if you could see, the company has not bought any money from the public because IT industry does not need any borrowings to run their show. In the same case, if you see Hindalco, a manufacturing unit, they'll be having a huge borrowings in the company because they need a huge money to set up their manufacturing unit. So if you see, the debt equity ratio would be very high. Hindalco is good. I mean, they reduced, I think, debt. We look at Vedanta. They're having a huge. So when compared to Vedanta, Hindalco is good. They are able to close their loans at a drastic thing. I mean, I don't see much difference. If you look at their, it's both figures are almost same. It's consolidated standalone. The numbers get changed. Anybody knows what is the difference between these two? I never researched on it. How to find share capital? Share capital here. Share capital of the company is here. It will be available here. If you still want, what is the number of shares? Number of shares. What is the face value of each share? You just go and download any financial report. It will be available in the financial report of the company. Okay, it will be available in the financial report of the company. In the report of the company, you'll have a balance sheet. In the balance sheet, you'll have a number of shares issued to the public with a face value. Okay, I'm downloading it here. Okay, next thing is that talks about borrowings, other liabilities, the money which company has taken from general public for which company is liable to pay back. That is called as other liabilities. Total liabilities is this, which company expected to give it back to general public. Fixed assets, everybody know. Okay, balance sheet is the company is in 2-3 segments. Standalone will be segment wise, total segments together. Okay, fine. Got it. So TCS has multiple subunits together into one and standalone. Okay, got it. For this company Vedanta, the both are same because there's no subsidiary in the name of Vedanta. Thanks for the answer. I also got to know a new thing. But with TCS had a multiple subsidiary, the number was changing for a TCS. Okay, next is. Now we are then fixed assets, the amount of assets available in the company. Audio gone. Audio lost. Now it's fine. Okay, where were we? where were we? Fixed assets, right? Fixed asset explained. This is it's work in progress, cash work in progress. That is current the money which company is handling to its day-to-day activities. That is called as CWIP. That is what? Cash work in progress. It is also called as current, cash in progress, cash in hand. Other word for this, cash in hand. The money which company is having in bank account for to run its day-to-day operations, liquid cash, is called as CWIP. It is cash work in progress. Let me confirm that also. Wait. CWIP. Capital work in progress. It's a capital work in progress. That's what I said. The capital which company is having to run as business day to day activities. Capital deployed by the company to run as operations. This is not, this is assets only I'm talking about. It's assets. I'm telling you about, not liabilities. Okay, it's asset for the companies. All assets. Liabilities goes here. The top till here it's liabilities. The bottom one start assets. So fixed assets we discussed. This is capital work in progress we discussed. Investment made by the company in different company, mutual fund, bank, FD. All those will come over here. Will come on this. Other assets could be different assets called as maybe whatever company is having other assets. So could be a machinery, not machinery. Other assets consists of other things apart from fixed assets like building. It could be a fixed goods, accumulated, bills receivable, cash in hand. Yeah. The bills receivable. This is bills payable, bills receivable. It is there here. Inventory is fixed goods, trade receivable, cash in bank, loans and advances. So it's all available here. Other assets, cash work in progress, capital work in progress. This is fixed assets, gross block, and total liabilities. So I'll summarize once again so that we can go ahead further. Let it refresh. Share capital deployed, reserve in the bank of the company. I mean, what is reserve in the company? Balance sheet. The borrowings which are taken from company has taken from different institutions. The fourth one is liabilities. Company is liable to pay. How much of assets worth of company is having? What is the capital work in progress? The investment made by the company. Other assets, what we discussed, total assets. So what is the inference for me over here? What do I need to look into all those things? That we'll run through now. Make sure the company is not borrowing a huge amount of money from public or a banks. The company should reduce their borrowings from year on year. We saw Vedanta is keep increasing its borrowings, whereas Hindalco is reducing its borrowing. 29, 28, 27. They are trying to close borrowing. So it does not mean that if the borrowing comes down, company is doing good. If it is going up, not good. Nothing like that. What is the inference? If the company is borrowing, proportionately, as the sales figure is going high, you should look into that. Okay? As proportionately as the sales figure is going high. If that is there, that means that company is investing the borrowings, what they have taken, for the better future of the company. That all we'll look into it when we go for the examples of all the companies. Next is cash flow, fund flow statement. This we'll take up separately. Now, tell me quickly, we'll run from 5-6 companies and see is it fundamentally good or bad. So that you will get to know all those things in detail. Okay. Well, before that, we will cover the cash flow, the fund flow, cash flow statement also. Let me take up that example before we could go further ahead. Okay. Now, Again, there's a formula to be used. I mean, not formula, the technique have to be used to uh, TTM is till the current month. I mean, YTD, year to date, expected returns out of the company till end of this year is called as TTM. Full form, I mean, I'm not sure. Let me see what is the full form. TTM in screener.in. Let it load. Okay. Trailing 12-month performance. Thank. Trailing 12-month performance. Okay. Expected returns by end of this month. TTM. We got the answers. A lot of experts fundamentally available here. Now, see, these all are so much of everything important. We'll see now with the example the theory what I've told. You can able to read. You can able to read the balance sheet when able to read the fundamentally good or bad stocks. We will come to know. You'll be amazed to see that we can easily so read it. We don't need to be experts in fundamental to identify fundamentally good stocks. Okay. Now, what is cash flow statement or fund flow statement? The business, the company is being formed. A business is being formed to deliver something, to manufacture something, to give service something. What is the core business the company is formed? The money is being generated out of core business is called as cash from operating activity. Okay, cash from operating activity. Any doubts in this? What is cash from? Now I want you people to pay much attention here, because is everything will make you to understand how to read your financial statement or a company's financial company's balance sheet or fundamentally strong stocks. Any doubts in operating activity, operating cash from operating activity? Any doubts? No. Guys, there are almost 70-80 people. I want some quick responses now on. We have to be a much more quicker. Okay? No. So for a bank, operating activity is interest received from the customer. Okay, interest. For automobile industry, sales of vehicles. For a service industry, like in IT, software sales or service. So it goes on. Any money which comes around from from the respective business forming unit, I mean respective business forming operation, business forming what the business informed, the main core business called as cash from operating activity. So what is the inference? If it is positive, it is good. If it is negative, it is bad. Clear, right? Okay, clear, right? If the figures are positive, it is good. The figures are negative, it's a bad. How can it be negative? Negative also possible because they lose money in the market. They lose money in the market. For example, you have invested 100 rupees to manufacturing a unit. So you kept 110 rupees for sales to get 10% of returns. But the product is not good. It has only sold at 90 rupees. You made a loss of 10 rupees on one stock, one sales. Clear? So you're losing money. See, your cost for the one unit is 100 rupees. You have put 100 rupees from your pocket. End of the day, you had only 90 rupees returns or 60 rupees returns. That is where you're not generating any money from your manufacturing cost. A cost of the unit is 100 rupees. So you have pushed 100 rupees. If you get at least 100 rupees, you will be cost to cost. But if you get 90 rupees, to give a simple example, your capital is 10,000 rupees in the company, and your cost per unit is 100 rupees. You manufactured total 10 units or 10 rupees, you manufacture 100 units. Okay, it's a complete loss, be it operation loss or be it a operating profit. It's a loss. It's a loss. So end of the day, you're not generating any money from your business. If no money coming from your core business, Hindustan Media, Jagran Prakash, we can see, let's see, Hindustan Media. It's not negative. You could see from JP Associates, there could be a negative. Not JP Associates. One more company, what is DHFL? See, negative. Can you see? Cash from operating is negative. That means that they're not able to generate any cash from their operating activity. It could be a negative. Okay. So you don't need to worry. So all you need to know is, if it is positive, it's a good. It is negative, it's a bad. See, I'm just teaching you what is important for you to be in the market. On top of this, you can always go and deep dive into see why it is negative, how can it be negative. You can do all R&D. Nobody is stopping us. Okay. Now, next is cash from investing activity or cash from financing activity. Okay. Cash from, okay, it means that what? Here, positive means cash is coming in. Negative means cash is going out. Next is cash from financing activity. Any activity, okay? What a second one, we'll take it investing. We'll take investing one first. Okay. Any activity, a cash is done in form of investment. Like could be a purchasing of new machineries, setting up of new plants, acquiring of new company, acquiring of new machineries, buying of vehicles, acquiring of new plant, investing in company's future. This all called as cash from investing activity. So negative figure and a positive figure. Negative figure is good, positive figure is bad. Agree with me? Agree with me? Does everybody agree with me? Okay. So what does this mean? If I'm investing in my company's future, the cash is going out from my business. That means that I'm purchasing, I'm acquiring new company. Okay, I'm acquiring new company and I'm investing in my future. That is called as cash is going out. What do you mean by cash is coming in? How the cash will come into the business in form of investing activity? Can somebody explain me? Give me an example. How does a positive cash come into the business in terms of investing activity? Perfectly. Selling of my asset. Okay. Selling of business. Okay. So these all are this or this See, convert into operating activity. Operating activity will not come here. Anything which comes to company operation, operating activity. Selling of investment will come in only this. If you are selling your investment, selling of investment. You are selling your investment to generate some cash in the company. Then cash is coming in. When the cash is coming in form of investment, okay, interest from FD. No, that will not come here. Financial activity, it is only part of investment. If you could see, go and see here, it is investing in investment purchase and sold. Okay, that is here. So any negative figure which comes into the company is good. Any positive is bad. Why it is bad? I'll show you some example. That is anybody could remember what is that company? JP itself will take it. Okay, we saying negative is a good for the company. Negative is almost everywhere. It's good for the company. Why do you see a positive here? Throughout the negative, that means the company is investing in its better future. Why there is a positive here? We say positive is a bad. It is a positive here. What does it mean? Can anybody could correlate this? Can anybody correlate this? Sold fixed assets. What would they sell? If you could correlate, and this year only, the JP Associates sold their cement manufacturing industry. JP Cements, they sold. Okay, they sold. They sold a Bakoro plant of Ultratech. Ultratech Cements. They sold to a different company to generate some cash. Why it is called as a bad? Why it is called as a bad? Because you are selling your company assets to generate cash to generate cash to run your day-to-day activities. That is a negative sign for the company. So we should not see any positive figure over here. Positive it comes means you are selling your assets to make sure the company sales goes increase. That is a negative figure. Okay. If I sold here, what the company did in this particular year for the what this money what has come out of it. If you could go to balance sheet, see the amount of borrowings has got reduced. They took this amount, whatever we got in the fixed of sold assets, they closed their borrowings. They tried to close their roles. This is how you are supposed to derive inference by reading it. It will not come in overnight. It is it will read this like this correlation. Okay, that is called as. So now everybody is clear what is investing and operating activity. If the negative and positive, how do we derive? Perfect. The last one is cash from financing activity. Any cash which relates in the financing, what does it mean? Borrowing of money from banks, repaying of money for the banks, okay, paying of dividends, paying of interest, all this will come in form of cash from financing activity. Again here, negative is a good, positive is a bad. Why negative is a good? Cash is going out in terms of, again here cash is going out in company in terms of repaying my loans, okay, repay my debt, dividend payout. What is bad in cash coming in? Buying of loans. I mean loans. I'm borrowing bonds. So the more we borrow, it is negative. One more way of looking into is There's one more way to look at this particular thing. Here, positive is a bad, negative is a good. Can somebody give me an example for this? Can somebody give me an example for this? Why negative is a bad? Cash going out is a bad? It's quite tricky. Let me say somebody can crack this. Why going cash out is a bad? Only in one concept. Perfect. You nailed it, man. Okay. Interest payment. No. Reducing debt is a good thing. It is reducing my loans is a good thing. My company's cash should go out to repay my loans, repay my debts, dividend payout. The company money should not go out for the interest payment. Okay. The company's money should not go out to pay interest. Okay. So now, can you able to correlate? Is any doubts in this? In this three kind of activity, how do we read the cash flow statement? So can we go and look into a couple of company sheets, how they're performing? Many promoters pledge their shares, and how can we know? That is will be available. Pledged, it will be available here. You can see it here. If the promoter has pledged their shares, it will come in company's comms list. Okay. Can we start looking into this all and correlate, and can we look into the company fundamentals in a quickly now? Perfect. We'll start it. Now I open IT industry. So we will take one share from each industry, not many shares. We'll restrict to number of shares because we have to also see how can we read the cash statement. Okay. IT industry. Book value is less. Current market is price is more. Of course, it is too high, 3 times in the book value, but still we can buy this company shares because the company book value will be always less in the IT industry. Can somebody tell me quickly why? Perfect. The banking industry, the IT industry will not have any assets in place. Their complete investment depends upon people, good value, company, good value, and people, software services, and service what they provide. That's the reason manpower. That's the reason the book value of the usually IT company will be very less. Do not take a inference of this anytime. If you take a Orcom, and the Reliance Communication, the book value was, look at it, the book value is 90 rupees, stock is 30 rupees. So when the company become dissolved, Reliance Communication, every shareholder will get 90 rupees. That it was 30 rupees when the stock below very less before selling of assets. Now it has become 90 rupees. EPS was minus 5, it has become minus 19. So people lost 5 rupees on each share, or people losing 19 rupees on each share. So don't invest in such kind of companies. Okay. So book value, fine. Stock P is decently placed. Company is paying dividend. Face value is also good. Average return 27%. Company is doing consistent performance from past 10 years. The ROE for every year is good. EPS has gone up. Promote only 36%. It's a good holding, not bad. Okay. PEG ratio is less than 1. A profit, good one. If I go to, there's no cons in the company. Company is debt free. Company is doing a good dividend payout, 39% every year. Okay. When compared to peer comparison, company is decently placed. Company sales is constantly going up. EPS is OPM is constantly it's average 14-15%. Company is able to generate a good amount of profits quarter on quarter on quarter on quarter. It's a good sign. The same thing will result in annual results. Here I would see company is paying a healthy dividend from last 4 years, which is also a very good sign. If I go further down, company does not have any borrowings. It's having a limited amount of borrowings. So the company is not paying much interest. It's very limited interest what they are paying. And if I come down further, cash from operating activity, it is a positive. Cash from investing throughout the negative. That means that company is investing in its better future. And cash from financing activity, it is also negative. Negative means it's a good sign. What does it mean? Companies does not have any borrowings, so they're paying only limited amount of interest. So where the money is going? Where the money is going? Money is going? No. Dividend. Dividend. Why the company will pay the interest? There's no borrowings only. Why will they need to pay interest? They're having a very limited borrowing. So they will not pay for borrowings. Here the money is going out in form of dividends for the shareholders. Okay, dividend for shareholders. That is a good one. So if I look into Infosys, yes, both are negative. It has to be negative. It has to be a negative. Financing activity has to be negative. Either their investing is purchasing sold, investment sold, it has to be a negative. I mean, investment purchased, the money is going out of company. So if we look into the company of TCS, yes, company is doing investing activity. To make it much more clear, let me put you an example and show you. I'm copying the last 10 years of financial statement of TCS. I'm adding it here. Okay. I'm adding it here last 10 years. Okay, the company is able to make a total amount of how much is this? You need 10,000, 10,000 lakh. So 1,26,503 crores is being generated, money has been generated by the TCS in last 10 years. How much they invested? Okay, they invested 50,802 crores. They invested this much of money in their future. So what is the rest money left? The rest money, that means that they have paid 64,974 crores of money in form of dividends back to the general public. So close to 50%, 45% banking company, 60% of money they're giving back to the public. So what is the money left with them? Okay, what is the money left with them? They left with them 3,000. Precisely this money minus sum of these two would be your balance amount. Okay, so this much of money is being left in the company balance sheet. If you go and look into it, this will be the company's left out amount in the company from last 10 years. Apart from reserves, they're keeping it separately. This will go and sit in separate bucket. So in the same scenario, we can look into every company will have similar kind of a statement. If we quickly look at Infosys, if we quickly look at Infosys, the company is able to generate cash of this much of money so far from past 10 years. Okay, this much of money from past 10 years, how much they have invested back into the company. So they have invested close to this much of money. Okay, so is my video passed? It's working fine? No. Okay, working fine, no issues. So Infosys is able to generate. Okay, now for a fact, for a minute, we will take up these two figures separately. We'll keep this figure apart. Okay. So till 2015 March, the company is able to generate the capital cash of 58,000 crores, out of which they have invested back of 7,746 crores into the investment, a better future of the company. So better future of the company. So what is the money? What is the money they have paid back to shareholders? They have paid 22,088 crores. They paid back to the as a dividends, because there is no interest part in Infosys, because it's a debt-free company. Now tell me, it is a good sign or a bad sign? They've got this much. They invested back so much. They are given back to the dividends of this much. The company is left with the cash of this much. Is it a good sign or a bad sign? Why it is a bad sign? Perfectly. Lying cash unused. It's not even lying cash unused. If you got so much of business, either you invest in the expansion of a company, or pay back to the dividends, pay back to the public who has invested in the company. Why are you keeping in a cash in a few in a account idle? You're not able to use your money properly. That's the reason we had a huge problem happen for past 2 years. Infosys, all the promoter pitched in, all those things come. Later only the buyback is announced. That is why you could see now the cash is going out. They invested again 14,664 crores. If you could see the entire last 10 years, they have invested only 8,000 crores. In this year alone, they invested 1:3 time. They've invested such a huge amount in the company future. Okay. Still they're sitting with a huge cash balance. Now they're trying to utilize the funds. What the general rule says, either you invest in your future. If you cannot utilize the money, give it back to the public. It's a giving back to the public. Yes, it's a cash rich company. Infosys has so much of cash. We used to say, I worked on Infosys for 2 years. The slogan what we say is, if the IT industry goes zero also, Infy has so much of cash balance, they can pay the salary of employees for next 5 to 10 years. They're sitting with the cash rich company. Okay, now you're able to correlate. How can we read the statement of it? Right? Cash statement, fund flow statement. Let us take any one manufacturing company, Hindalco. So you should start reading this one by one. Then you'll be able to derive inference out of it. What's happening on here? They got so much of money from sales of aluminum or a steel. They invested so much of back in expansion of the company. Okay. Now tell me, what is this? What is this? So the company, the sales what they've got is only 27,698 crores. But they have already invested 44,944 crores in the expansion of business. How did they invest? How did they invest? From bank. That means that the difference of these two will be your borrowings. Okay? The rest would be in your cash balance. Now can you correlate? Why do we say investing is a positive is a bad sign? It's not a actually bad sign. Here you have borrowed more than what you're supposed to it. That is why your debt equity ratio would be too higher. When the debt equity ratio is too higher, you are bound to pay a huge amount of interest. You're bound to pay. Look at the interest amount. Interest amount is huge. To see a very classic example, we'll look into JP Associates. Okay, we'll look into this example. You'll get a much more clarity. Why do we call as a company as a bad company? JP. So company is able to make this much of amount by selling of selling of building new construction apartments and all. They made us so much of money as 35,000 35,000 crores approximate. And they have invested 68,000 crore 150 68,150 crores in the investment. What does it mean? They've acquired a lot of lands. They acquired a crane equipments, big equipments for construction. So everything they acquired, which costed them 68,150 crores. And so how did they do it? They borrowed 34,026 crores from the general public or banks or institutions to invest in the company's future. Now, just think, guys. If you have borrowed 34,000 crores from a outstanding loans on the company name, how much money they are supposed to pay as an interest? In case of Hindalco, what we saw, company has borrowed so much of money, the company is paying a interest of 2,000 crores. Okay, company is paying a interest of 2,000 crores, but the company is generating profit of 40,000 crores. If I'm generating profit of 40,000 crores, 35,000 by expenses, I'm able to save 4,000 crores, out of which I'm paying my interest of 2,000 crores. Okay, then I'm able to still say 1,500 crores. In case of JP Associates, I have also borrowed same amount of money, 34,000 crores. Here I paid an interest of 2,100 crores. Here how much I'm supposed to pay? I'm supposed to pay interest of 7,000 crores. Okay, I don't know how they borrowed so much. Now the catch point here is, guys, you carefully look at it. Hindalco, we got so much of money in sales, we are able to pay the interest. But in JP Associates, the entire sales itself is 13,000 crores. Now look at the funda here. The entire money what you're generating out of sale of your building flat apartments, you're able to generate only 13,000 crores, out of which you're already spending 15,000 crores as expenses. So your income is already overshooting above the net expenses. On top of it, you're also supposed to pay every month interest of 7,000 crores for the borrowing what you have made. So altogether, it is giving us a negative value every quarter on quarter on quarter. Now tell me, do you want to invest in such kind of company for your future? right? So now this is one of the bad company, one of the bad company. Okay. So let us maybe take any other one more company. Let us take bank. We saw manufacturing, we saw IT industry, we saw retail infrastructure, and last we also see one of banking industry. Okay, SBIN. I've taken SBIN only. So the bank is able to generate this much of amount in form of interest from public. That is good figure. And the bank has invested back in the future this much. Okay, cash from financing activities are positive, even though they have invested less amount. They need to borrow cash from public because this was the banking industry. Okay, they have borrowed this much of money and they have left with a huge amount of cash. Not a problem, because how come SBI not borrowed any money from public here? Very less borrowings. Huh? They do have. Look at the borrowings what they've made. So for this huge amount of borrowing, they have to pay a huge amount of interest. Right? Look at this one more thing here. Every company we saw the OPM is 10, 15, 20%. Look at the OPM in bank, because the OPM in the bank have to be extremely higher, because they don't set up any manufacturing unit nor the sales and all they do with the software, lending of money online. That's the reason you see operating margin is very, very high in terms of banks. Yes, bank. Look at the S Bank. It is able to crack 70 to 80% of operating margin. 70 80% of operating margin. Even though they crack so much, their major part will go in form of interest. Still, they're able to make a good amount of money as a net profit. This bank started with a net profit of 55 crores. Now they're able to crack a net profit of 3,300 crores. Look at the growth they have given from last 10 years. From 50 crores to 3,000 crores. Okay. This is how you are going to read the company cash flow statement. So any doubts in this? How do we get the inference out of cash flow fund flow statement? No doubt. Okay. Now, quickly we'll go to a couple of companies and see how it is working. Let me take any example. Tell me some companies now. Why tax negative in IPA? See, because they're not paying tax. That's why it's come as minus. Okay, here see, promoter holding is very low. Contingent liability is this much because they're having a company, I mean banking industry, right? Any cement company, uh, DHFL, we'll look at DHFL also one more time. Company book value is this, current value is this. So what does it tells you? This tells me this is a very bad. Okay, because it is a manufacturing company. It is a like what? It is a land dealing company. So of course they should have a good amount of assets with them. Why it is so less? It has to be equal to equal, right? So let me quickly look into see. Let me look into what's happening in the cash flow statement. Something is not wrong here, because if it's a manufacturing company, I mean construction company, the company should have so much of land with them. So much of land with them, real estate. So much of land with them, right? They're able to make so much of cash. Oh, look at guys. They are not generating any cash out of their core business. On top of it, they keep investing. On top of it, they keep borrowing. What's happening here? So if I look into here, the borrowings is constantly growing up. They're able to make a sales of 9,000 crore, but they already paying back interest 7,000 crore. Now tell me, is this a fundamentally strong company? It's housing finance. It's not a finance. Housing finance means they sell the apartments, building flats and apartments. That's what, right? DHFL. Okay. So why will I invest? They are not able to generate. Look at here. They are not able to generate any money out of their sales. Instead, they're losing. On top of it, they are investing back. They're investing back. And cash is financing is positive. So now I did not see on top. What could be the dividend percentage for this company? It would be 0. See, look at debt to equity, 10%, 10. A huge amount of money is going in terms of interest. That is clearly visible over here. Interest. Okay. Earnings per share. It's constant. It's not increasing. I'm still wondering how did the IPS EPS go high? Are they giving generating any profits? Yes, they do generate a couple of profits. This is Divan Housing. See, they are able to generate some profits, but overall the fundamental is bad. His annual results. Okay, let's see interest. How much payments happening here? Okay, yeah, they're paying a huge money of interest. Yes, EPS is going high because they're still able to generate some cash, but the interest part is very very high. NBFC, NBFC, NBFC. What is that stock, guys? Equitas, EQUATIS, Equitas Holding. Book value 66, 153, not bad. Face value is 10, dividend yield 0. Debt equity is very high. Company is not doing any consistent performance from last 10 years. EPS has gone down from 4 rupees to 2 rupees. The company is not fundamentally strong. PEG ratio is 0. See, no prawns. Company is doing profits, they're not paying dividend. Low coverage ratio, low return on equity. What's happening? Sales are increasing. Constantly, this is also increasing. Operating margin is coming down. Sales are increasing, agree. But when compared to past 10 years, they gone down by 50%. 63% was the operating margin. They have gone by 40%. Their sales was 210 crore with 36,000 of profit. Sales have become double, but the profit has become only 10. It is 70% stock is reduced. That means what? The company is going in a bad shape. The company is going in a bad shape. Ideally, sales expense should go hand to hand. If they're able to make 36% of 36 crores of profit, they should also make 36 crores of profit here also. Okay. So they are moving into a till here they were good. Till here they were good. Post which 16 onwards, September, December, March, and they're going down. Let's see annual results. See, gone down by 50%. Expected this. What is a TTM? Okay, because OPM is going down from 60% to 40%. Next up, and if I go further down, see, there is no money coming out of cash from operating activity, not money coming in, and they are investing and they keep borrowing. If they are borrowing, they are paying interest. See, they are paying interest. Interest is constantly going up from 68 crores to 600 crores. 100% increase. If interest is going up, people will not get dividends. Dividend payout is 0. Okay, what people will invest, if you invest in this company, do you think you get dividend? 0. So every ratio is correlated. This is how you are going to read the company. Now, tell me a couple of companies. We have 15 more minutes. We'll quickly run through four to five more companies. NMDC. Okay. Book value, do not book value fine. Mining company fine. Dividend yield, very good dividend yield. The Silphys shows that 3.45% and debt equity is 0%. There's no company has not borrowed any money from public, and EPS has gone 1 rupee up. Very good. PEG ratio is 0.85, less than 1, but fine. And promote hold is 75%, which is very good. Companies holding good amount of promoters shared with them. And if I compare to a PE ratio, they are decently placed at 15%, and they're able to make last 10 years 23% average returns, and last this year 10% returns. It's also good. Any company which is constantly paying average returns about 20% in the last 10 years is considered to be as a good one. Okay, if I go to further down, the company is able to maintain the constant or a little bit of increase in, okay, from June 15 onwards, they're able to make a good amount of sales quarter on quarter. Okay, where quarter on quarter, the expense also constantly going up, and they're able to make an average of 40 to 45% of operating profit margin. It's a good one. Other income not highly placed, it's also a good one. They're able to make a good profits quarter on quarter. Of course, it has decreased when compared to last 10 years, but again they're trying to pick up. And annual sales figure also looking very good, and they're able to make a good amount of dividend payout to shareholders. So you'll not be cheated upon if you invest in this company. Okay, and if I go further down, the company is able to make a positive cash from the company, and the company's investment is also negative, but here again it's positive here. Not sure why it is positive. The company could have sold some assets, so that's why I could see some negative things happening over here. Suddenly sales dip had happened here from 1,500 net profit to it has dipped here. Did they reduce their borrowings? Can we see? Yeah, they borrowed here, again they paid back the complete borrowings. Okay, that is why there is a dip over here. In this you can see the variation over here. Again the borrowings has been completely repaid. Company is virtually debt free. That's the reason you see the company debt ratio equity ratio is 0%. Okay, any next company? Tata Power. Tell me some bad company. Tata Power. 45.90, 2 times higher, not a problem. Good dividend. Equity is high because they have to have some equipments of electric. That's why they have borrowed so much of money. But they're able to, 10 years, they're able to give returns of 7-8%, but they increased to 11% from average last 10 years. That means that good 30-40% of growth. And EPS has gone up by 1 rupee, which is really good thing. Okay, and if you go further down, good dividend yield payouts, promoter holding to 33%. It is low, but we know Tata company, we can trust on the company brand name. Okay, and if I come down, sales is not so increased. Constantly they are doing it. They're able to make some good amount of money, but they went wrong here. Again, they rectified themselves back in here. Annual results, they're paying a good amount of dividends. It was negative here, but it is paying good amount of, how come the dividend it be negative? And I'm not sure. Okay, it is a good amount of dividend payout happening, and they're able to make a profit out of their sales. They are able to make investment back in company. They're able to make altogether positive means the thing is they are keep borrowing money from public. That's why you could see that borrowings has gone up drastically from 4,000 crores to 40,000 crores. Okay, because of course they need their money for the expansion of their business. So I would say the company fundamentals are good. Now let us go for our favorite stock, Sai Baba Investment Company. Okay, Company book value is 1 rupees, 14 rupees. Dividend yield is 0, debt equity is 0, EPS is 0, returns is 0, stock is 263 PE, company is not making any sales, no expenses, no operating profit. What's it? 61% out of 0.16 crores. Net profit is 0, no annual figures, no share capital, no cash flow. So will you invest in this company? Promoter holding. Okay, promoter holding is 0. Who is holding the shares? Why the share has went up from 13 rupees to 500 rupees? One more company. Sri Krishna Prasadam. Right? We're getting SMS every day. 4 rupees 31. 0, 0, 0, 0, 0. No sales. No sales. No cash balance. Nothing. Any money. Now again we started getting one couple of messages. JVL Agro. JVL Agro. Guys, how much you look at, the concepts remain same. This is how you're going to read. See, one of the good company. Okay, because your book value is current price is less than the book value. Current price less than book value. That means that if you buy this share 35 rupees, if the company becomes Diwali, company become closes today, you still will be getting a 36 rupees one share. That means that you are getting a complete value back to your account. Holding is 55%, and the PE is very high. Let's see the competitor PE what it is. Peg ratio is -7. It's not good. Average returns is 8.56%. But again, returns here is very low. Company is degrading day by day. It was 1.93. It has become 1.31 EPS this year. That is visible here. Company is to give an average returns of 8%. Now it is no return. So why will I invest? Okay. Of course, if it's technically strong, I will invest. What's happening? Company is not able to generate any money. Something like able to generate their sales on their capital, and cash from investing activity is a positive. That means that they are selling their assets. They are selling their assets to make some money to run their business. Cash from activities all throughout the positive. That means that they are keep buying more and more money from public, from banks to run their business, which is visible in terms of interest. They are paying a interest. They're able to only make a profit of 97 crore. Out of 97 crore, 83 crore they are bound to pay it back as a interest on their borrowings. So the entire money is being lost. So where do they make a profit? Okay, how do they make a profit? So much of money is being wasted. But here what's happening, they're able to make 97 crores profit in terms of sales and expenses, out of expenses, out of which 83 crore they're supposed to pay the tax, I mean interest. How they're managing? They are managing because of some other income. Okay, other income is coming in the company. They're able to run their show with the help of other income. Then why are they doing the sales if the money is coming for other income? And how are they managing rest of all the things? What is happening? They're just trying to sell their assets, started selling their assets. They keep investing in the company till 2014, 15 onwards. They started selling their assets to make sure that they're able to manage the expenses, because they're not able to generate any cash from their operating activity. Right? Now, can you able to correlate? How do we read? Now you tell me, Suzlon and Fortis, last two stocks, no more further stocks, guys, please. Suzlon Energy. Book value is minus. If you invest in this company, you will not get anything. So forget it. Debt equity is minus. I don't know how it can go minus. EPS has gone up. No returns on equity. Nothing. And the sales have gone down by 4,000 crores to where somebody can explain that. Somebody asking what is TTM multiple times, please. Somebody answer that question. And look at the consistency. Minus 5,300, 100 profit, again 1,000 crore profit, again become 3,430, again 7 crore. Why do you want to invest such kind of nonsense company where there's no consistency? They're able to generate some cash out of their business, but again, they are not investing, again selling their assets. Again, they're investing. Again, negative. Altogether, this entire money they're paying in terms of interest. Look at the interest part, how much they are paying. Okay, they're able to save capital of only 2,000 crore cash, but is supposed to pay 1,320 crores as a interest. They are getting 500 crores of other income. Why other income such a huge? See, JVL Agro, they will turn up. They might turn up. Technically, the stock is good, but I'm looking into now. I don't see the company is not a good fundamentals, guys. You could see it is not fundamentally strong. The company is not fundamentals, and they're not able to make any money out of it. If you're good at good profit, just exit it. It might crash any day. That's what I feel. It's fundamentally the stock is not doing good. The EPS is going down day by day, and the book value is the current price is coming down. Then the book value, okay, and PEG -7, not a healthy sign. They were giving 10% returns, 8% returns, 10 years. Now the returns have become 3.3%. Not a good one. Okay, now enough. Yes, that's what I said. It is not good. Fundamental stock is not good. So if you exit it, if you see any if you reversal, you read it. Company is not able to generate profit from its sales. How they are managing? Till here it was okay. How they are managing? They are borrowing, they're selling their assets. Fundamentally weak. Okay. Next question is what? Last company was CDSL. Somebody said CDSL. Last one. CDSL. Book value 56. It is 358. We know it's a goodwill company which goes on a goodwill. Yield is fine. Debt equity ratio 0. Company has gone up by APS has gone up. They're giving 17% returns. Okay. And price to book PEG ratio is quite high. And the sales is constantly increasing. They're able to get an operating profit of 50% and no interest payment because there's nothing on top of it. They also have other income on top of it. So they're able to make 26, example, out of 47 crores, they're able to make a 2677 crores as a profit. So what is the profit percentage? Promoter holding is 0 because it is holded by the central government. It is a government company. They're able to clock somewhere around more than 50%, 57% of profit they're able to make out of their sales after paying all taxes, expenses. So why will I not invest in such company? Okay, look at the percentage dividend they're paying out. And cash from financing activity is negative. They're able to invest, and cash from this also negative. That means that they're paying a healthy dividend payout is happening, and we know it's a monopoly company. Okay, so now let us stop here. We do not now tell me. I want to answer from you people. Now you tell me, do you need to understand what is PE ratio? What is a good PE ratio? What is the formula behind it? How it is being derived? What is this? Or this is sufficient for you to read the company, is it fundamentally strong or not? No dividend payout. Equity is 0.43. Promoters holding is good. They are minus 1.8. They're giving a good results of 10% now average. It's a healthy sign. Sales has constantly gone up. They're able to make a good amount of profits throughout. It was all negative last 10 years. Now they're turning into positive. Something happened exactly here. I don't know what they changed. Okay, some other income has come into over here. Or else the company is not good, not so good. Now I put this and see how they're managing their company and business. Okay, right? Now do you agree now? So you don't need to be. There are thousands of people who teach fundamentals. They'll sit you wait for 5 hours in a 10 hours of classroom. What is PE ratio? What is good PE ratio? How do we calculate PE ratio? What is the formula? Everything they'll take a 1 month of fundamental class. Do you need all those things? Our main intention is just to make sure that fundamentally stock is good or not. That's all we need. And top of it, we're going to look in technically is the entry is there. If both are matching, take an entry, you'll not be cheated out. Right? You'll not be cheated out. No, Maitan Alloys. You saw some new name. I come in to look into here. Look at this. EPS has gone from 60 to 100. Almost 40% increase. And companies not having any debt. And last 10-year average return is 26%. Now they are coming to 37%. Again, good 40% increase in your return on equity. PEG is ratios less than 1. Okay. Sales has constantly gone up by double. Other income remains constant. They're able to make a constant profit out of their business. Annual results is going up. Good dividend payout throughout the year. Good capital coming into the company. They're also investing in their better future. They are paying a good amount of money back to customers. Still, they're able to save money. So, do you think this company is fundamentally strong or weak? That's all you need to know. That's all you need to know. So, do not be very specific. I should read fundamentals. I should know how the promoter hold is coming, how the EPS calculated, how the PE calculated. Nothing. We don't need all those things. So now, if you find such kind of company, you make a note. See technically charts. If the charts are strong, make a blind entry into the stock. You'll not be in any kind of a problem. Okay, that is how you are supposed to read the fundamentals of the company. And of course, this is not one thing. You can always go to the further in depth for the people who want to understand more. Okay, now you start creating your own queries. Okay, screeners, how do I say? You look into MGL and tell me if you find what do you find of MGL. Okay, enough. If you start looking into charts, we can look into for next 48 hours also. Quickly, we'll close it. So, what you're supposed to do is you're supposed to go to the again this one. Go to screeners. In the screeners, you just pick up any one scanner. Okay. After one scanner, let me finish last MGL, guys, please. I have to close it. Very high price, good dividend payout, no results. Company making EPS last year, paying good amount of dividend. Their cash was good. Investing activity is good. Financing activity is good. Their sales is constantly increasing. It's flat. No increase. It's a flat. It's fine. They're able to make a good amount of profit year on year. Annual sales is good. They're paying a good dividend. Dividend also good amount of dividend payout and the PEG ratio. Yeah, PEG is only one cause of concern, but fine, you can ignore that. Still, it's a good stock for investment. Okay. Go to screens, go to any one bull candle, and you can start writing your queries. Okay. Now, how do we write our queries? Now you know you have read all those things you have written. Now you know what is a good thing. Now how do we create our can't much higher? It's overvalued. So caution is must. See, we are not investing for life ever. Here we are looking into the charts. If company is strong, look into the company's technical charts, invest into it. How do we write a query? Good query. Average return on equity should be more than 30%. So what I will do? Average returns on the equities last 10 years is above 30%. Okay. That is my fundamentally strong stock. And average return equity is above 20%. Return equity should be above 20%. What else we want? Debt to equity ratio should be what? Less than 1%. Okay, what else parameter we can put? Growth, right? Say which growth? Sales growth or profit growth? Sales growth is greater than 15% and profit growth is greater than 15%. Then what else? Operating margin. Borrowings already added. Debt equity ratio is borrowings only. Operating profit above 25%. Any other parameter? P ratio below 17. What do we call here? We call it as stock PE. It's not coming. Price to earning, right? P ratio. It's a different one. Price to earning is a different ratio, right? Is it the same one? Am I right? Price to earning ratio. Okay. Price to earning ratio should be less than below. Less than 17. Any other parameter? Promoter holding we cannot put because promoter we don't need it. It differs upon industry to industry. Let us not put promoter holding parameter here. Any other parameters which you want me to add? Make it like can slim. I didn't understand. Dividend. So what do I put? Dividend payout last year, preceding year, yield or dividend payout? Which one I'm supposed to put? OPM is already there. Have a look at it. Operating profit margin, we added it. Dividend, what I'm supposed to add? Dividend yield. Okay. What is the percentage I'm supposed to put? Guys, I don't think above 6% is good one, guys. Above 1 is a good one. Above 1 is a good what I feel. Above 1. Okay, anything else? We'll run this query. Let's see how much results we get. We did not get any query which matches all our criterias. Okay. So there's no such company in industry which does this all kind of too much of expectation. Yes. Okay. Somebody said can slim. What is that? Okay. Yeah. See, he's added all the parameters. Okay. Now see, this is how we are supposed to build a query. Operating profit should be lesser. Operating profit, no, operating profit is fine. Let us see sales and profit growth. We'll reduce this and we'll see if we get some stocks. Return equity will make it as 10. Okay, operating profit will make it as this also 10. Price to earning ratio less than 17. Make it less than 27. Okay. So after all those hangamas, we got two stocks. Genberg Pharma and Care Rating. Okay, let's see what is this. I never heard of the stock. Pharmaceuticals, good. See, EPS has gone up 28%, 31%, 28%. PEG ratio is also good. And company is able to make profit. Good company. Good company. How the price is behaving? It's constantly growing from 60 to 500 in terms of say 4 years. See, this is how you can start creating your own queries and reduce the number of parameters. I can also add a parameter. So see which is good in each kind of industry. So you cannot put all things arrive at it. This how there's one more query. It's just somebody said me this. Okay, you can use this query, and so now there are many number of stocks coming in this query. So add one more parameter. Current price is less than 100 rupees. Run the query. Nothing is less than 100, guys. Everything is above 100 only. 200. I've got two stocks. Indo Almines, Banzale Engineering. Both are beautifully doing good. No debt in the company. OPM is 15%. Profit is percentage 97% last 5 years. Good stock. Good. Debt it has become 2 to 5. It's too high. It's okay. They don't have it. They're into specialty chemicals. And stock is performing beautifully up. Oof, that's all, guys. I'm done for the day. Anything else, guys, which need to be covered? We have some expert how to use stockage and chartness because no videos, no forum. How any so is this class for useful? Now you know how to read the balance sheets of companies, right? How do you read fundamentally strong stocks? Now it's up to you. You are up to you. You have to scan, create multiple filters, Start creating new scans, keep a track of fundamentally good strongs. And once you create your scanners, you can always say, send a mail to my, save the screen. It'll automatically shows mail whenever any stocks comes from the screener. It's because I'm exhausted. I had a lot of meetings today. A whole day I was in a lot of trainings and meetings back to back. I'm done for the day. I hope session was useful. You people will not be cheated by badly fundamental stocks going further. Okay, you'll not be cheated by any bad fundamental stocks going further. Nobody can cheat you easily going further. Okay. In regards with stockage and stockage application, of course, I've told very clearly many times, we will take a separate session on stockage. If you keep asking same question again and again and again, my answer still remains same. We will take a class. We are not closed or completed. Please stop asking again. We know we told I will take separate session on stockage. We will cover stockage. We will cover stockage application and charting screener separately. Charting screener, ma'am has covered you today. I have shared all the screeners, and intraday technique also has been taught by you. I mean, intraday technique has already been discussed today and been what do you say, completed. Okay. BTST techniques ma'am will teach you, because today I thought of covering the opening range breakout technique and BTST, but anyway ma'am has covered today. So BTST technique, maybe ma'am will cover tomorrow BTST along with opening range breakout. I hope it's already covered. Tomorrow's topic, we have covered fundamentals, we have covered technicals, we have covered options, we covered futures, and we have covered tomorrow we will try to cover stockage and what else is left? Tomorrow we'll cover stockage and the trend line screener. Yeah, we will clear some doubts on options. Stock shorting list. Stock short list is a major problem. What is that stock short list? Maybe I will try to cover. Okay. Okay, I'll do one thing. Rest all doubts. Whatever is pending, you can cover with ma'am in tomorrow morning class. We will dedicatedly spend tomorrow entire day. I mean to say that we will dedicatedly spend tomorrow entire day. How do you screen stocks for the next day? I'll teach you how can you identify a breakout stocks. Option trading, we don't do option trading. Now you have to start practicing option trading by yourself. Any doubts are always a welcome. Nifty trading techniques. See, Nifty trading is simple. Now you can look into see that Nifty trading today, what's happening in Nifty. See, reading of charts and all live market you cover with ma'am tomorrow. Tomorrow I will take how do you tomorrow we'll screen lot of stocks. How can we find out the breakout stocks for tomorrow? We will cover that. Is more important. We will cover. It has not been covered. Okay. If you look at Nifty option chart, call unwinding happening at all level. Nifty is bullish. Put writing happening at heavy level. It's also one more way of bullish. Read the Nifty charts on tomorrow onwards with the help of coming with the help of Excel chart what I've shared. So tomorrow we'll spend Okay, Fibonacci, right? Okay, I'll cover tomorrow Fibonacci series, and we'll cover tomorrow screening of stocks, tomorrow or day after tomorrow. Any one day we will cover. And in regards with charting and in regards with stockage application, I will not be covering in this batch. This Saturday or Friday, I will take a complete separate video. I will record it for a stockage application so that you can complete fully available. Maybe we'll try to cover that Saturday, second half, or Sunday we'll try to cover that. Intraday ma'am has already covered. BTST ma'am will be covering tomorrow. Jet Airways, there was a security was under ban. We've discussed. That's the reason call unwinding, put unwinding, both were happening. So no inference can be derived if the security is under ban. Intraday BTST, Fibonacci has not been covered. I'll cover Fibonacci. Intraday and BTST, ma'am has covered already today. There's one more 45-degree angle theory. If we read, I'll take it. We will see if we could cover one more round of intraday technique. Yes, you can short any stock if it is under ban. 45-degree angle, please remind ma'am to take it. Ma'am will take 45-degree angle tomorrow. If she is not taking, we'll have one class of stock screening, and we'll have one more class to how to do ORB trade and how to do a 45-degree angle trade. I'll take separately one more class. Okay, we'll take it. We'll take it. Intraday techniques are more important. We will teach you in depth, in detail. You'll not be cheated in the market. Okay, don't worry about all those things. We are there to help you out. Okay, now done. I'm thought to complete 9 o'clock. Some guest is at my home. I have to attend them. We will catch up tomorrow. Have a lovely evening, guys. And cash, one can short and sell for intraday. Yes. Thank you. Thanks a lot. I just need one small feedback. There is a one expert in our group who's fundamentally expert. Okay, is the session was useful? I don't know who it was. If the person is available in the class today, coming. Okay, guys, we will please leave feedback. We will catch up tomorrow. I'm getting a call from my home. Thank you.